What sectors should you be looking at investing in? Our next guest is a man with a finger on the pulse of the leisure industry. He thinks that gaming will stage a comeback this year. Let's catch up with Mark Harms. He's Chairman and Chief Executive Officer at Global Leisure Partners. This is effectively a financial services business. You provide all sorts of investment-related advice, I guess, to companies in the industry, or perhaps investors who want to get into the industry. Mark, how are you? You all right?
Very good.
Good. So let's get into this. What kind of recovery are we going to have in 2011 for the sector as a whole, do you think?
Much stronger than I think people originally anticipated. And I think some of the things that are driving that are a lot of costs were taken out over the last couple of years, which were really very difficult for virtually all aspects of the leisure sector, tourism, travel, hospitality, gaming, and the like. So the consumer confidence is really coming back up again. We're certainly seeing at the CEO level. I'm a member of an organization called YPO, 17,000 members globally. Their consumer confidence comes out on a quarterly basis, and it's the only global measurement of it. And it's really at all-time highs for the past 3 years. UK is ahead of the rest of Europe, which is lagging the rest of the world, but nonetheless it's quite strong. So I think that the consumer tends to lead to a self-fulfilling prophecies, and so we're pretty optimistic. We're specifically optimistic about European gaming, about the development in Central and Eastern Europe of certain of the consumer sectors, South America, which we think has been really overlooked by a lot of the investment community, and then a bit of a contrarian play on UK retail.
Gaming is a fascinating area. We've seen a lot of issues with legislation and regulation. The French seem to have given a lot of ground, but initially had a lot of resistance to particularly online gaming. What is going to drive the big growth opportunity for the European gaming sector this year then? Where's the new spender coming from?
What we're seeing, it's actually being driven by governments. High structural deficits, governments need money. One of the best places to find it is through gradual liberalization or legalization of what's been a very tightly regulated market, unlike in the U.S., which has, one could argue, reached maturity. So we're seeing casino tenders in Austria. Greece has passed enabling legislation for video lottery terminals and really expanding its gaming. Italy has developed into a singularly interesting investment market for gaming. A 400,000 gray market has turned into a very well-regulated, transparent market. 55,000 new video lottery terminals are coming online. Several billion euros has been invested into this market in anticipation of the growth which is starting to come through.
You mentioned the YPO the Consumer Confidence Survey that has been conducted by that organisation, and it talks about, or executive confidence rather, and it talks about hiring as one of the big themes, that many of these executives are confident enough to be talking about hiring into the future. Is that, whereabouts do you see that level of confidence where people are prepared to take on staff?
I think that the confidence is really being driven by the smaller companies that tend to be the engines of economic growth, and so we're certainly seeing it. YPO has its members generate over 5.4 trillion in revenues and employ over 15 million people, but about a third of those are smaller companies, and that's where we're really starting to see that resurgence in confidence.
You mentioned a contrarian view on UK retail. Obviously we're seeing real incomes being squeezed as inflation moves up, wages are not responding. So what's that view based on?
The view is really based on a historical resiliency of the UK consumer, which we've seen. We know that there's a lot of structural pressures that are being placed on them, but we tend to look holistically at the UK market from an investment perspective. We think that valuations are very attractive today. We are starting to see a fairly significant amount of M&A activity, as well as refinancings. The good news is that the banks are back in business again, and private equity, which is a significant part of our client base, is definitely taking a contrarian but quite positive view on the investment opportunities and being able to acquire businesses at interesting, attractive prices with relatively good risk-reward ratio.
Mark, pleasure seeing you. Thanks very much for coming in and just updating us on the opportunity as you see it. Mark Harms with us, Chairman and Chief Executive Officer of Global Leisure Partners.